The traditional real estate closing process has a lot of inefficiencies. Don't need to dwell on those. Anyone who's been through that process knows. Dozens of steps, dozens of intermediaries, costs 5 to 10% of the value of the home, and it takes easily 4 to 6 weeks. The question is, how can blockchain help with that?
We're live from CoinDesk's Investing in Digital Enterprises and Asset Summit, and you just heard one of today's presenters raise a multi-trillion-dollar question: how can blockchain fix the costs and headache associated with real estate transactions? Geoff Thompson, onChain Chief Blockchain Officer at Roofstock, joins us now, along with Sanjay Raghavan, the company's onChain Head of Web3 Initiatives. Hello there, Sanjay and Geoff.
Hi, thanks for having us.
All right, so Roofstock just announced its first property sale via NFT. Enabled by a Web3 subsidiary, Roofstock onChain, it was purchased with Circle's USDC. Now, Roofstock hit a valuation just shy of $2 billion last March after raising $240 million in a funding round led by SoftBank. So how are you attracting such strong venture interest, especially in a bear market?
Strong performance. Last year was a banner year for us. It was a banner year for single-family rental homes in general. As you know, it's a $4 trillion asset class. We work with some of the largest funds, institutional investors, and retail investors. So by having feet in both sides, we have a large market cap.
So maybe you can explain a bit about Roofstock and why you focus on single-family homes.
The mission of the company has always been to make it more accessible to purchase a single-family rental home and to manage it remotely. The whole idea of Roofstock was, let's use technology to make it this asset class something that's accessible to retail investors in addition to institutional investors.
All right, so we can see, looking at your website, that Roofstock is up and running with a marketplace of houses available for investment. So maybe you could walk us through the process of investing in one of these properties. How does it work? And Sanjay?
Sure. So the Roofstock has both a traditional marketplace as a Web2 operator, as well as Roofstock onChain, which is the Web3 subsidiary, has a Web3 marketplace where buyers can transact with NFTs. So what Geoff and I lead is the Web3 division of Roofstock, and on that marketplace, it's possible to sell and settle a single-family real estate transaction in minutes, as opposed to the several weeks it takes to close a transaction typically in the Web2 way.
So how many property owners have you signed up, and how many houses have you listed on your marketplace so far?
So on the regular Web2 marketplace, we sell 2,000-ish properties a year. That's been going on for a few years. On the Web3 marketplace, we sold our Genesis property last Friday. And to our surprise and delight, the Web3 community has received it really well. And in fact, crypto Twitter is basically blowing up right now, and we're just struggling to keep up with it.
All right. So the housing market in the United States is quite expensive right now with the interest rates going up. So I wonder, many first-time home buyers can't afford their first home right now. So I wonder, does your program do anything to help them out, or how are you leveling the playing field, if at all?
Absolutely. So for our thesis has always been that decentralized finance is going to be the absolute category killer for this asset class. And this sale that we did last week, we were able to get financing with our partner Teller Finance, and they were actually able to provide 6% interest-only loan, which, if you compare with the traditional TradFi markets right now, interest rates today are at about 7% APR for conventional 30-year fixed mortgages. And when you look at investment properties, they're theoretically 75 to 150 basis points higher than conventional rates. So when you look at something that might have been an 8.5% 30-year amortizing product, and you're able to offer a 6% interest-only product, that's a game changer for first-time home buyers. We anticipate that DeFi will eventually be the preferred way in which single-family purchasers will want to do business, at least for rental properties.
Are there any risks that investors should be aware of, going into these products?
We carefully choose the inventory that's on our site for the onChain initiative. We're aware that a lot of the investors may be coming from the crypto native side of the equation. Maybe they've thought about real estate but haven't spent a lot of time thinking about it. So we do offer education. We encourage people to think carefully about the purchase. It's not like buying at JPEG. There's property we manage. There's a tenant that has to go with it. But we do offer services to help evaluate the risks and to help manage the property.
Are you the ones finding the tenant?
It depends. We can. That's a service that we offer, but the owner has the complete control if they want to find it themselves or if they want to hire a different property manager.
And with rents going through the roof, especially in New York right now, is there any good news for renters in your model, or can investors pick up the rents, or can they jack up the rents rather as much as they like?
Well, they're constrained by markets, the supply and demand, and there are some, legislation protections as well for tenants. We've seen the rents leveling off. As you said, they have skyrocketed recently, but we've seen that they're starting to retract in some areas. It's really just a question of supply and demand in the market.
And right now, with the interest rates continuing to rise, how are you protecting your investors, your business, against a slowdown in the real estate market? Any concerns about the recession?
Go ahead. Sure. So, when you look at these asset classes like single-family rental properties, there's two components to it. One is the rental yield component, and that acts basically like somewhat similar to an inflation-hedged fixed income product, because when leases get renewed, typically there's a small increase in the annual rent, in the monthly rent, and that sort of acts like a little bit of an inflation hedge. So that's on the cash flow component of it. And then on the when you hold this asset class for a sufficiently long period, say 5 to 10 years, typically the asset class has always had, at least on aggregate, it's had price appreciation, and that portion of it acts like an equity kicker. So this is a really good non-correlated asset class, and it has withstood both the 2008 crisis and more recently the COVID crisis. And from both of those, it has emerged as something that not only just withstood those crises, but came out of it looking stronger. So we do believe that it's sort of the first innings for single-family rentals, but it's going to be an asset class that will continue to grow, and especially because of its non-correlated nature, both to the stock market as well as crypto markets, it's a really good asset diversification strategy.